Hey, welcome back. Lots of scary stuff is happening right now, so we're going to talk about it. Let's get into it. Welcome back to the Wealthy Idiot Show. My name's AJ. Welcome to the show. If you haven't yet, please smash the like button down below. It super helps us out as we're starting to share the knowledge we've gained. We need other people to hear this stuff, especially this video. We want this to get around to new investors, and it would greatly help us out. So please like and subscribe. Thank you. So what I want to talk about is there's scary stuff happening in the market. If you've been investing at all recently, you've noticed that your investments haven't been doing too hot. Just looking over the past few months, everything looks to be pretty stagnant, or in a lot of cases, a lot of my investments have dropped. So what we know we're probably in a recession. Everybody's kind of admitting that at this point. I think that we're also heading to a depression by definition. We saw a decrease in the GDP last quarter. We had the biggest money print off during the pandemic, which is causing inflation. In order to fight that inflation, the Federal Reserve is bumping interest rates. They've bumped it 0.5% this week, which is the biggest bump since 2000. We just saw the biggest the stock market fall since the beginning of the pandemic, and that was like kind of artificial, right? I mean, we locked everyone down. We said businesses weren't essential. Very everyone had to kind of stop the economic activity. So we saw a stock market drop. We just saw the biggest drop since then, and we have no lockdowns at this point. We have no businesses we're trying to stop. So that's not a good sign. And we know that China is doubling down on their total lockdown plan. They announced that this morning. So that's not a good sign either, as we're seeing, one of our biggest suppliers of goods here in America pull back. So with all that, I want to say I know that investing is scary. It's scary for me. It's scary for us here. We see our stuff dropping too. We get that when you put money in and you immediately see a loss, that can be a little depressing and kind of hurt our interest in this investing process. Back in 2008 is when I first started trying to invest. I put $5,000 into a mutual fund and immediately saw it drop to 3,500 within a few days. And I pulled it all back out, and I didn't invest for quite a while after that because I was too scared. But we know, from the information we're seeing, we know that leaving our savings in physical cash is a terrible idea. Cash is producing almost no gain, but we're printing off cash. So, I mean, effectively, we're seeing a loss in cash. We're seeing inflation, which means we're losing buying power. Leaving our money in cash is a terrible idea. And the only other option is spending it all. We can spend all of our money. It's personally destructive. What happens when we get into, some serious problems and you need that in order for an emergency, or the government stops being able to support you if you lose your job? You need the ability to hold yourself and your family up. So we have to have some way. And we totally get that seeing losses is not fun. None of this is fun. Seeing the market drop and everything increase in prices is frustrating. It's depressing. It's not the fun part of investing. But what we're going to do here at Wealthy Idiots, we personally are going to fight through this feeling, right? It's not fun to see this happen, but we know that fighting through this and getting to the other end is going to be greatly beneficial to us. For example, people who bought houses in 2008 are people who are wealthy today. They saw that everything was down at the bottom of the market. They scrounged cash up anywhere that they could and bought up as many houses as they could. And now today they're the wealthy. So what we're going to do is find new sources of income, save money, try to spend less, invest more during this time as we see this giant dip, because we know when the market starts to bounce back and everyone wants to get back in and gets excited again, that we're going to be reaping those benefits, and it'll be a lot more fun. Could be a few months from now, could be a couple years from now. We don't really know, but we know that we're going to really enjoy that part of investing when we start to see everything slide up at an extremely rapid rate. I want to end on a few quotes here, maybe hopefully motivate you to push through this time. One is, or two of them by Warren Buffett. The first is: the stock market is a device to transfer money from the impatient to the patient. We're going to be the patient. We're going to keep investing and be patient and watch it grow in the long run. The second thing he said was: a market downturn doesn't bother us. It's an opportunity to increase our ownership of great companies with great management at good prices. All right. So same concept. We see the market downturn. That's a sale. I said this before too. There's two times in the market: when everything's going great, and then when everything's on sale. As everything keeps going on sale, we're going to keep buying it. The last quote by Shelby Cullom Davis is, "You make your money in a bear market. You just don't realize it at the time." So it may not feel like it. Watching your wealth decrease is depressing and it isn't fun, but this is where wealth is made. This is when wealthy people are made, is when you invest now. So when the market bounces back, you're the one who is reaping the benefits, not the people buying at the top. Right? So I want to encourage you all to stay positive, to keep pushing through, to find new ways to invest, because everyone here at the Wealthy Idiots, all of you guys who are watching, we're going to be the ones who are wealthy on the flip side of this event. And I hope to see you. Thanks for tuning in. Please check out our website, wealthyidiots.com, and I'll see you guys next time.